Hi, everyone. Welcome to the Canadian Passive Investing Show. I'm your host, 𝗖𝗣𝗜 𝗖𝗽, and I'm joined by my co-host, August Biniaz. We have another incredible show for you today. Please like and subscribe as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers. Now, our mission is to empower investors to earn passive income through real estate investing. Today, we are joined by Christopher Salerno.
Salerno.
There you go. It sounds good. Hey, you got it almost. Yes.
We just practiced it like 65 times, but that's fine.
It's all right.
Excited to have you, Chris. Now, Chris is an entrepreneur and an investment manager with a history of success in building and rebuilding profitable businesses. Named to Charlotte's 30 Under 30, Elite 50 Entrepreneurs, 30 Under 30 Entrepreneurs, and nominated for Forbes 30 Under 30. Chris has quickly gained recognition and notoriety for his hard work and dedication. Now, since CPI Capital's conception, Chris has successfully acquired over 500 multifamily units, totaling over 80 million in value. Chris leads CPI Capital through each stage of the investment process, beginning with the acquisition, then through due diligence, asset management, and into disposition.
Wow, incredible.
Incredible. So we believe this interview will bring value to anyone looking to start or scale as an active multifamily investor. The show will also be tremendously helpful to passive investors looking to invest in multifamily real estate opportunities. And furthermore, because Christopher's success at such a young age, we hope this interview will motivate young entrepreneurs to start out early in their real estate investing space. Great. So welcome, Chris.
Welcome, Chris.
Thank you so much for having me. Very excited to be here and add some value to your listeners.
Thank you so much. So maybe, Chris, you can start off by telling us a little bit about your background and your start in real estate, please.
Yeah, so I've been in real estate about 6-7 years. I actually started out in the single family space. I was a single family broker here in Charlotte, North Carolina. Very quickly became the top broker for Keller Williams. I then created a company, and at the time I merged that company with the #1 company and #1 team in the Carolinas with Keller Williams. We were also ranked number 4th in the world at that time by unit count. And when I did the merger, I'm so intrigued with business and still am today. I love it. I dive very deep into it when I see someone post or a news post something about a business, either negative or positive. I dive deep into it. I want to know the mindset, the thought process behind that decision, behind that acquisition. Why did they do that? And so when I merged both of our companies, I fell into their operational role as their COO. And I found so many cracks throughout their foundation. And I started tweaking things very, very slowly. And I was able to make them 46% profitable in about 1.5 years compared to their 3 years of being stagnant with no growth. When I left, or when I joined, did the merger, they were around 95 million annual sales. And I was able to bring them to 148 million just in that 1.5 years. But I felt like I hit a ceiling and I was tired of that hustle. Just like those individuals out there right now that are possibly listening, they have that W-2 job and it's that 9 to 5 and they just feel like they're in that hustle and that rat race. That's what I felt like. And so I sat back and I really looked at the bigger picture and I said, I love real estate. I'm staying in real estate, but how can I build wealth? And I went back to a game called Monopoly. And I realized you have to own the large buildings in Monopoly and you have to own them all to win the game. So I started educating myself on the 2008 market. I knew it was a real estate housing crash. So I wanted to make sure what was the strongest asset class during that time. And come to find out, it's the asset class we all love, which is multifamily. And it recovered the quickest. So from there, that's when I started educating myself, listening to podcasts and watching shows like you guys have, and educating myself on the multifamily industry. And then very quickly, I created CPI Capital and then scaled the company to what it is today.
Great, awesome background. And I experienced the same thing with my background being in construction and development, single family and ground up development in multifamily. When I saw the gains and the business model of multifamily value add, it was a no-brainer. I fell in love with the business model right away. I mean, just like you mentioned, it's been resilient through multiple cycles, through the 2008 crash, through COVID. I mean, it's performed better through COVID in some cases because of COVID. So it's truly incredible. And this concept of cash flow from day one. I mean, if you have cash flow, if you have a market appreciation, and then you have forced appreciation in a real estate investment, you've had all the three of the check marks, and it's a winning recipe. So
Yeah,
great.
absolutely.
That's right.
Now, Chris, QC Capital, why don't you tell us about its inception and what pain points for investors do you solve, and what is your business model?
Yeah, so our business model, we focus on right now acquiring large multifamily assets, the newer type of properties. So we call them Class A and B plus, which is built anywhere from 2000 to present, 2021. We really have a very strong focus on around 2014, 2015 to 2021 of type of assets. We look anywhere from 100 to 350 units. We don't go below or look at anything that's below 100 units, with a primary focus of the large metro cities here in the Carolinas, Atlanta, we'll look into, and then some of the Florida markets as well. And we focus on the primary cities. We'll look into certain secondary markets, but it's mainly the primary markets that we are heavily focused on throughout the Southeast.
Great. And now maybe you could also, there was an item I wanted to kind of focus on, and that's about your youth and being in this space. We've been following you for a while. We've had a few conversations and communications with you, but every time that we do, we look at you, you're always surrounded by, leaders in the space, but people that are at times double your age. And I'm totally assuming and presuming that, but tell us about your young start in this space. And how it went, and talk to us also about the pros and cons of having a youth and being young in business, because there is pros and cons in that aspect.
There is, if you limit yourself. If you set those pros and cons yourself, I don't even think about it. My age is irrelevant. Business is irrelevant when it comes to age. It comes down to your experience and your knowledge. And I've gained a lot of knowledge by listening to podcasts and videos, just like you guys post. Videos that we post on our social media. And that right there has helped tremendously. So I'm able to get into those type of rooms with the high level individuals that are in our space. I think the biggest thing is for those individuals out there that are young, they'll think that, my age is a negative impact on my business. That's not true, in my opinion. I don't even think about that anymore. I just talk business. I don't have time to talk about my age. We're not on a dating website. We're not about to date. We are about to get married and do business together, but we're not going, too deep into like the dating scene. So I really don't get into my age. I get into what are we looking at? How can it be valuable for our partners? What can we do to make it valuable for the partners and the tenants that live in there? And so that helped tremendously get over that when I used to have that in my younger days. But to get into these rooms, and for these individuals that are younger and they want to get in, for example, there's two billionaires I chat with on Instagram. And we go back and forth. We talk real estate. They're both real estate billionaires. One lives in Austin, one lives in Miami. And I go back and forth and we talk on Instagram to each other. We talk business, we talk a little bit of personal, but to get to those individuals are very, very difficult. And how I did that was one individual actually went to his office. He had security, everything locked down because of his status. I could not get into his office, so I left him a letter, and this was 6 years ago. From that, I stayed consistent with posting positive things with his company and things like that. And then now him and I have a great relationship. And he said, next time you're in Austin, Texas, let me know. We'll grab dinner together. The gentleman in Miami, there was some negative press that came out. And I sent it to him. I said, hey, just to let you know, just so if any of your partners, make you aware, he read it. He says, thanks so much. Do you mind commenting about this and comment this? And I did that. And he was like, thanks for looking out. And so him and I now chat probably 3-4 times a week. And so that right there, I've learned how to add value to individuals like that, so I can get into those rooms. And in the multifamily space, that's what I've done early on. And now, I'm in those rooms and looking for larger rooms to get into.
That's incredible. Now, kind of staying on this subject, we're in the real estate private equity space, so we are the sponsors or the operators, however you want to call it, the syndicators. We find the deals, we bring on the investors, and we manage the project for a portion of the profits. So the deal is a very important component, but the investors are also another very important component. And what Ava and I realized early on is that the people we were servicing, the investors we were servicing, are extremely sophisticated in their own space, in their own field of expertise. These are doctors, surgeons, lawyers, accountants, people that were much more educated than us, much more successful than us, and much more wealthier than us in most cases. And because of our focus, because of our dedication in the space we actually were able to make a connection and bring something of value to our investor database. So, and it goes to what you're saying as far as the age kind of concept, or what your age is irrelevant, because it's about the business, it's about the numbers, it's about the metrics, it's about the value you're adding to your investor database, or also to your network of influence. So yeah, talk to us about the process of building relationship with investors that I'm guessing in most cases are people who are older than you and in different stages of life than yourself. So talk to us about that, if you may, a bit.
Yeah, I definitely will. But I want to touch on something you said that popped out to me extremely important, is that you are an expert in your space, and your investor base is not necessarily an expert in your space of owning, operating, and raising capital. And so they seek to you because you are an expert, you gain the knowledge, and you're helping them. And now, the great thing about real estate, it's not rocket science, but you're guiding them through that process, and they want to make more money on their money. And so that has helped tremendously of gaining that knowledge, bringing that information to them, a good deal with great numbers, great returns, a risk adjusted type of asset to them. They see that you're an expert in that space, so they want to partner with you. And I think having the knowledge that you guys pour into them is tremendous. And at a very young age, it helps. And that's what I've done to have the partners that we have, investors that we have that are double and sometimes 3 times my age, is that I bring them deals. I know the market very well. I know what's going on. I know they can say something or say a return or an exit cap, entry cap, and I know the answer before they're even finished. And they see that and they're like, wow, you're an expert in your space. And I said, I eat, sleep, and breathe this. This is all I do. I don't do anything else but eat, sleep, and breathe QC Capital and growing the company in the multifamily sector. When people come to me and say, hey, Chris, have you seen this deal in the Carolinas? And they start naming off the unit count, I automatically give them 3 to 4 deals at that unit count. And they're like, wow, you already knew it. I said, I know my market. I was at the IMN conference. Gentleman came up to me, twice my age, came up to me and said, I'm looking at a deal. It's a 5.2 cap. I said, it must be in Columbia, South Carolina. He said, how'd you know? I said, because you're not going to find any other large cap like that in any other markets unless it's a secondary. And I would not buy in Columbia because it's government and student housing. He goes, wow, thanks for letting me know that. So it's knowing your market, and that helps tremendously build those relationships with my partners in our investor base that are older, who are 50, 60 years old. Sometimes it's a little awkward when they tell me, yeah, I'm having issues with my 26-year-old. I just, yeah, I understand what you're going through, and then I go straight back to business. But other than that, it's really being an expert in the space, knowing the market, knowing my product, which helps tremendously, because that's what we'll seek if we go to one of our investor partners who are an attorney or a doctor. We trust their judgment because their education, their knowledge about medicine, about law, we trust their judgment. So all you're doing is flipping the script. They're trusting your judgment on making sound investments for them.
Well said.
Well said. Well said. And maybe you could talk to us about how you bring value and nurture your investors.
Yeah, very much so. Bringing value is tremendous. It's not only bringing them a deal with great returns. I think it's also educating them, because you have to feel they have to feel comfortable investing alongside of you in these syndications or into your fund. So it's really educating them. So we pour out content on our social media. We do monthly letters that we pour out, educating the investors on what's going on in the market. What are we seeing? What are we seeing with cap rates? What are we seeing when it comes to returns? How are we seeing the market play out with COVID? The eviction memorandum for the United States just got extended another 60 days. What are our thoughts on that? Where do we see things going? So adding that educational part, they see that as your leader, they see that you know what you're doing, and that helps them feel more comfortable with you and want to stay, have you top of mind and want to stay and being connected with you, because you're giving that type of educational resource to them about investing. Everyone loves real estate investing. So if you give that education to them, you'll see that they're gonna be with you. You're going to be able to nurture them long term, and they're going to be loyal to you and invest with you. You know, if you have a deal from now or 8 months from now, they're going to come back to you and invest because they see you as an expert and as someone who educated them.
Yeah, no, and few points from there. So consistency
Yes,
is very
always.
important. Having obviously a CRM or a database where you can, stay in touch with your investors and add value in, you talk about education. And I have a, in the past, when I was involved in construction or development, or when I was doing sports, boxing, I would always try to gain knowledge to better myself in that space. But what I'm noticing these days is that when I'm gaining knowledge, if I'm reading a book, if I'm reading an article or a blog or watching certain videos, when I gain that knowledge, I'm actually going to be sending it to our investors, and potential investors, not only people that have invested with us, but people that, are part of our database. So I'm sending them information. I'm doing all the work, gaining the knowledge, but sending, the best part of the golden nuggets that I've, gained from that information. I've been sending it to the investors. So it's great that you mentioned that. Now tell us, are you currently, is there any current projects that you recently closed on, or any deals you're currently looking at? And talk to us about kind of the process of the deal. Like how does it come about? Obviously your boots on the ground, you have your ears to the market, you know it very well. So as far as the deal coming across your desk, I'm sure you're doing a great job, but talk to us about the process. The deal comes to you, what is the pipeline that the deal goes through before it gets presented to your investors?
Yeah, that's a great question. So we build very strong relationships with the brokers here in the Carolinas and in the Southeast. The benefit of living in Charlotte is that it's in the middle of the Carolinas. So a lot of brokers live here. For example, last Friday I went golfing. I'm not a good golfer, but I went with a couple brokers here, and they presented us 2 off-market deals, Class A. And that's the ability that we have, is that we can go and build those strong relationships, where if you live in New York or Canada or anywhere else, it's very difficult to do that. And so we build those very strong relationships, or I build those strong relationships. When a deal comes in through our pipeline, it's either a broker sending it to us, or if it's on market, it will go directly to our deals. We have a email that's separate, deals. It will go directly to our deals. I also get those emails too, so I always forward it to deals. That's where our acquisition team will dive deep into it. We'll start our underwriting process. Our lender, insurance guy, and our property manager will start underwriting the deal to ensure that we've hit all of our criteria. We stay very strong and strict to our criteria. Very quickly, we'll be able to analyze a deal to see if it's going to meet and exceed our criteria. From there, if it does, we'll go ahead and move it to the next level, where we'll dive deeper into the underwriting, dive deeper into the financials, knowing the market, searching the area, double checking new construction, taxes, you name it. From there, if everything pans out, then the deal gets presented to me on why it's a good deal. We do a tour, get a good story behind the deal and understanding of why the seller's selling it. From there, we dive even deeper into the deal when it comes to rent comps, expenses, all of that, to make sure that we've penciled everything in. Then we'll go ahead and submit an LOI. Normally with this market, as you guys know, it's very attractive and people are bidding astronomical amounts during best and final. So once we get through that best and final stage and get awarded the deal, that's when we'll start putting all of our marketing material. We have partners, fund of funds, co-GPs that partner with us alongside of us, and we'll come all together. I'll make sure all the marketing material is consistent. It'll get uploaded to our portal. All of our offerings are a 506c, which are open to only accredited investors. So we'll prepare that. We'll prepare a drone video, and then we'll prepare our webinar. Once all that's prepared, we'll blast that out. We'll set an invite for the webinar after we blast that out. And then that's how our investor base will start to gain the knowledge and get in contact and understanding on our distribution list on what we're working on and why we're working on that deal.
Great job. Great job. And you,
Streamlined process.
I gotta attest that you did not read that off a script. Everything came to your mind right away. So it's obvious
I
that
eat, sleep, and breathe this.
That's incredible.
We can tell.
That's incredible. Awesome. I had one more question here before we get to the next part of our show here. So again, it goes to this kind of concept of education, educating investors in the space. And a lot of passive investors gain their knowledge from portals or at platforms such as YouTube shows and podcasts. And unfortunately, there's a fortunate part that there's a lot of great content, but at times, because of consistency of a certain message, the idea gets lost. So this concept of value add, a lot of times value add is associated with a significant amount of renovations, an asset that's built in the 80s, possibly early 90s, where it hasn't recently been renovated. Value add is associated with that business model. But as you have said, and as we have seen in our last two, our most recent acquisition and our current investment opportunity, that value add is not only done by older assets that need renovation. Value add is a more broader concept that is bringing some sort of value to an asset through forced appreciation, through capital expenditure, through restructuring management. And you spoke of that. You guys look at A class and B plus assets. So an untrained eye or ear would hear that and say, "Hey, how's there a possibility for value add?" Yeah, where's the value add? So talk to us about that, and how do you come up with creative ways, and how are you opportunistic in finding a deal within that newer asset class? So talk to us briefly about that, if you may.
Yeah, no, I love that, and it definitely comes down to the network and the relationships you've built. And in my opinion, when it comes to the Class A, because you have to think outside the box. And you're right. When someone says, value add, they think of 80s, 70s, 80s, 90s, renovating everything. Well, technically a value add is I put a Nest thermostat in there and up the rent $10. That's a value add. Or, trash valet, up the rent $25. That's a value add. So value add is broad, like you said. When we look at these Class A's and B pluses, we try to think outside the box. Do they have a tech package? Do they have smart home key fob entry? Is it a gated community? Can it be a gated community? Do they have a locker system? What type of tech can we implement into the gym? Dog parks, those are huge right now, especially with millennials. There's a certain type of asset class that we are looking at right now, and we're best and final, that has some retail space into it. Well, I think it's 6,000 square feet that is vacant. Well, what do? Well, the best thing to do, in my opinion, is go ahead and build out storage facilities in that vacant unit and rent them back to the tenants. And if those don't get occupied, you can just rent them to anyone, around the area. So thinking of those type of out of the box things on value add, not only that, and people think, okay, we need to add value to the units to increase it. It's not only that, it's a value add could be a operational play, cutting expenses, doing partnering with a cable company, partnering with a Wi-Fi company. So the whole operational side can also be a value add. So we like to look at an asset, a Class A, Class B plus, and think outside the box. What can we do to really enhance the additional cash flow, the rental premiums, to where our competitors that we feel comfortable where we are with our rental premiums, and we can hit our performer in that market. And that's also partnering with certain companies that come in and do different type of things to the interior units, where we can add that value to these Class A's, which the other comparables are not doing.
That's fantastic. For anybody listening, now you can kind of get an understanding on how you can do value adds on newer assets.
No value adds are done. No, for sure. And for me to say one more item here is on our most recent deal that we're currently doing the raise for, we noticed that the property is being managed by the owner, so it's self-managed. We're going to be bringing a third-party property manager, and our costs for management are going up. But we can also see that the occupancy is going to be brought up, and because when you have a third-party property manager, your costs might go up by bringing a third-party property manager, but they have a strong marketing team and they have other creative ways to increase the income. So on our pro forma, the income is actually, even though there's a higher cost to the third-party property manager, the income is much higher for the different ideas that they're implementing. So just wanted to add that to the conversation here.
Yeah, you definitely got to think outside the box when it comes to these B+ and A type of assets. It means a lot to it.